start recording. Okay. So where do we start? Okay, I'm gonna. Yeah, I'm sharing my screen. Yeah. Okay. So let's start by just quickly going through what fib numbers essentially are. Okay. I'm gonna use this as an example. Okay. So the way fib numbers work essentially is they all come out of this 0.618 number, and this number is pretty much a ratio that applies.
But you may have listened to fucking group
Bro, what is this? Okay. Yeah. This ratio comes out of like the natural sequence, like Fibonacci sequence, right? And this ratio applies in a lot of different aspects of life. Like you can read more about this in, I guess, Scott Carney's books. I think that it's explained there very well. So if anyone is interested in more details how these numbers like work, you should read that book. It's a quick read and it's a good book. So I would very much suggest that. Other than that, yeah, all of the orange numbers you see on my chart right now are numbers which come out of this 0.618, and the way they come out of it is if you root 0.618. Look, I'm gonna use the calculator. So 0.618, and if you use a second root of this, you get 0.786, right? If you square root 0.786, you get 0.8866. If you square root 0.8866, you get 0.9416, etc. This is this number here on my chart. Now, if you 0.618. Yeah, okay, wait. Let me. How the fuck do we clear this? Yeah, okay. There's 0.618 on square. So, like this is 0.382. So, you get 0.382 if you put 0.618 on square, right? And if you put 0.382 on square, you get 0.145 or 146 essentially. It's this one. Now some other numbers like 0.236 and the others you see here like 0.63, 595, 707, 726, they come out of like different ways of combining the roots and the squares, right? So yeah, just really you can calculate so many different fib numbers, and I've personally like chose to use the ones you see here because I find they are the most suitable for me and what I need. And yeah, these, and then you have. Okay, so these are basically the base numbers you want to use when you're looking for retracements, right? So essentially, say you want to look for a retracement on BTC, right? You're gonna pull the fib. This is the most basic application of a fib, right? You're gonna pull from a swing low to a swing high, and you're gonna look for potential entries on these fib levels, right? The thing is, you don't want to solely rely on this one pool to get a good idea of where you want to enter, right? Because it's not that simple. Like, you know, one fib level can react, but another might not. It might just get blasted through, and this is where you want to use other tools and or other fib applications that I'm going to show you later to kind of get a more confluent area than just like a single fib level, right? Because that's really useless. You're pretty much gambling on a bounce, right? So you don't want to do that. You want to have more confluence. Yeah, I'll do that later. I just want to explain the basic fibs first. Then I'm gonna go into more detail on what I actually use. So yeah, first you wanna really like get your numbers correct. So the main numbers are the ones in orange, right? The other ones I just use to form some kind of areas or to find some extreme points of reversals, right? So like 0.09 and 0.94 are like the extremest possibilities of a reversal, right? So I just use them for that. So yeah, this is the most basic application of a fib. Now, and these are used for retracements, right? Now, another one you can use is extensions, right? So how you use an extension really is, let's say, for example, we are on BTC here. You're pulling your fib like this. You're searching for a retracement, right? And you can clearly see we are currently sitting on 0.5 fib, right? In this area. Now, what you can do, right, is, let's say potentially Bitcoin was gonna drop below this low, okay? Now what you can do is you can, so now you see you have no fib numbers here below this low, right? And you want to search for our potential reversal point after you've broken this low, for example, right? And what you can do is you can take a fib from this low up to the high, and you take fib numbers that have 1 in front of them, right? And essentially these numbers are your extension fibs, which work exactly the same way as the retracement ones, but you can use them to measure extensions of a move. So if you have a range, you can measure how far a move could go to the downside, right? And find your areas where you'd be interested in buying, for example, right? So I have a lot of them here. Now they're not all like used often, right? The ones that I mainly use are 1.272, 1.618, sometimes 1.772. This is a fib number I've calculated myself, and it does work a lot of the time, so I kind of use this one sometimes. It depends on the situation. I can use it as confluence, you know, that's the thing. Then you have 2236 and 2618 and 314, which you might be asking, where the fuck does 314 come from? Well, it comes from P. You know the number P, right? To measure like the diameter of a circle and shit. It does actually work in the same way as the 618 and others. So 314 is a good number as well. And 3.618 is good as well. Now, keep in mind, like these, like 2 and 3 extensions, these extensions are rarely getting hit if you pull the way I did, right? So, like don't try to be too extreme with the measurements. Most often you're gonna find useful the 1.272 and 1.618 in my opinion. At least I find them the most like usable in real case scenarios, right? So I'm gonna show you an example of where such an extension would come in handy, right? So let's look at this range on BTC. So we had this range, right? We were moving like this in the range. Now, what happens in ranges very often, this is not like something that happens like very rarely or something, it's something that's very common, is there is a fake breakdown, right, of a range, so, or fake breakout. It doesn't really matter how you call it. The thing is, these, you can see this one here, right? This is called a deviation. You would call this a deviation move because it reclaimed the range, right? It essentially broke the range low, right? Closed above, even went lower, but then proceeded to reclaim and retest here. See? And how you could have known this was the case is because when there is a range, very, very often the first breakout into some direction will be such a deviation move. Because these moves are here to fake out people, right, and trap them. So you can be sure that there was so many people who shorted this, right, this area, and we ended up just blasting through and going higher, right? I mean, of course, it just makes sense just to liquidate them, to generate liquidity, right? People shorted here, the people who know what they're doing, they bought here, right? Now, why did they buy, you might ask? So you have this range, and you have range high and this range low, yeah? Like this is the clearest leg of this range you can find. So what you're gonna do is take your fib like this from the low to the high and turn on your extension fibs. Now I have a lot of different presets for my fibs, so I'm just gonna use the deviation preset I have, which gives me a 1272 right here. And this, for me, this is like a pocket between 1272 and 13434. This is like kind of the area I'm looking to see a reversal, right? When there is a range deviation happening like this one. And yeah, I mean, you can clearly see like how this level, right? Look at this. We went into this zone, we consolidated a bit, then we had a breakout, but no successful retest. You had a breakout, closed above, retested on this candle, and then went up. So what you can do is one option you have is you can just limit long the 1272, or like in this example, you can wait for a breakout and retest of this 1272 and just enter with stops below the low, right? And you're gonna have this simple trade of a deviation move. So like these moves, when they happen into this 1272 from such a big range, a lot of the times they're gonna reclaim the range and go back to the range high. So really, even if you limit long this, right, you're gonna, okay, that's a short. You're gonna have your stop loss somewhere below the 1343, right? And your TP can easily be range high, because if this is gonna be deviation, you should visit range highs again, because you're just gonna reclaim the range and go back up, right? So this is one way I use my fibs, right? This is the first way. Like you see a range and you're expecting some kind of move down, or you see a breakdown and you want to find your entry. This is one way you can find one. Just take a 1272 range deviation. That's a really powerful confluence, in my opinion. It works very well. Now you can say, yeah, we are in this, currently we're in this mid-range kind of thing, right? You can say, I mean, there is many different ranges you can take here, right? You can take this range here. So let's take this one, for example. You have high and low. We're gonna take fibs like this, right? And you can see here, tap into 1272, breakout, retest. So you'd enter like this, and you would have moved your stops to break even, of course. You would have taken your TPs here, of course, right? And this was actually the move we did catch. Like, I don't know, like 6 analysts called this long, I believe. So yeah, like, you see, this is one of the confluences you can have, to just have this range deviation move measured. Pretty simple. Now that we've broken this low as well, right? You can say, okay, I want to measure from this low because this is now a bigger range, right? Just gonna do this, like this, and your next 1272 deviation will be at like 62.7k ish, right? Now what you can do, right? You can see this is a daily order block, and you can use, you know, other Fib applications that I'm gonna talk about in a minute as well. So let's say, yeah, you got this area now with the 1272, and you want to find more confluence for it. You're gonna draw this order block, right? You can see this is an order block, like this. Let's say it's like this, right? You have now 1272, you have an order block, and now I'm gonna show you some other applications that I've kinda, let me just read chat first. I'm gonna continue in a minute. Oh, yeah, chat taking notes. Yeah, that's cool. Yeah, it's recorded. Yeah, deviation is when structure resumes in the range you've broken out of. I'm not gonna check break right now. Sorry, I'm doing something else. 1272 is in red, correct? Yeah. 1272 is red, and like you can use any color you want. It doesn't really matter. It's just about what you like. So yeah, now I'm gonna show you some other applications that I've kinda adopted myself. It's not something you're gonna find other people do, at least most of them, because this is just purely out of my own testing and my experience with Fibs. So, okay, I personally use a normal fib retracement and a trend-based fib extension. I use both of the tools because I believe that they're both equally useful. Okay, now let's start with a very simple one, but it's a super powerful one. So let's say you have an order block, right? An order block like this one. This, you can say, like, this whole area here is, I believe this is a weekly order block. Correct, it is. So this is a weekly chart. You can see this whole area, this is an order block, right? If you go on the daily, that would include this one. So this small range here, this is an order block on the weekly. Now, what you can do is, you know, this area is an order block, but this area is like 7% wide or something, right? How will you know where the good entry is in this order block, right? You won't, unless I show you this. You take the fib from the bottom of the order block to the top of the order block and take the 618 fib out. Only the 618. You don't need anything else on this one. It's just the 618. And the number, I mean the price you get on this 618, this is pretty much the target of this order block. So once this 618 is filled, I would say an order block has been filled completely, because 618 of an order block is essentially where most reversals happen. Not all of them, of course. It can only be used as a confluence, right? But most of the reversals from an order block will happen at this 618. Now I can show you on an example here. Look at this. You have this order block, right? This would be likely a weekly order block. I'm not gonna switch to the weekly chart right now, but this is the Coinbase chart, so I'm pretty sure this Coinbase chart is a bit scuffed, but on the futures chart, this wick touched the 618 exactly. So I might as well go on, I don't know, Bybit chart. Okay, I believe it should be, it should touch here. Yeah, no, it didn't. Okay, I mean, I guess I'm just retarded, but anyways, like 618 of an order block is likely an area where the order block will tap, right? So you can use that as a rough guidance to where your entry should be. I think that's a really cool thing, like you can use to get more confluence on your exact entry, right? And by the way, generally, if an order block works, it should not, like this tap into the order block should not exceed a 786. So ideally, when we tap this order block, we won't even go past the 786, which is at 61.26. Okay. So what I usually do is have my stop loss like just below the 786 or somewhere around it, because I found that if an order block does bounce, it won't even reach the 786. So that's just from my own testing, and you know, you can for sure you can use. I mean, you can test this yourself if you want, and I suggest you do. So yeah, that's one way to pull a fib. 786 intensifies, yeah. But I'm more of a 618 enjoyer than a 786. Yeah, yeah. From the way I pull, I target the 618 every time. Okay, now this is one way you can find confluence for your entry. And there is another which I do like even more, and this one is pretty much you fib a break of structure. Now this might sound absolutely confusing, but it's very simple. So okay, let me just remove these. Okay, yeah, like that. So it's very simple. You're gonna go, I don't know, I'm gonna go on the 4-hour time frame, and we're gonna go here just because I know there is good examples here. And what you wanna do is you look for a move down or a move up, whatever, you look for a move, and when the move reverses and breaks structure, here you can, this is a break of structure, right? Like on higher time frame, this is a break of structure. So ideally you want to look for longs here in this example, right? But of course you're not gonna long up here, right? You want some kind of retracement. Now how you can find this retracement is you can check when the top is in, right? When the high is made and you start reversing down, you can see what the last high of this move down has been that has been broken on this leg up. So in this case, this wick is the last break of structure that happened on the way up. Okay? Do you understand? I just want to make sure you understand this because it's really the important part of this part of my fib applications. So you want to look for the highest high, or if you're looking for shorts, the lowest low that has been broken on the way up when you broke structure, right? And what you can do is now you have this break of structure and you have this low, and you take your fib from the low up to the break of structure, right? From the highest, to the highest high that was broken, and you get a 618, which I'm very positive that this Coinbase chart is scuffed. I'm gonna go on the MACD chart. I just want to see why it doesn't tap, because it should. No, it doesn't. Okay, I mean, it doesn't really matter though, but okay, so the thing I use a lot is this, like you take your fib from the bottom of the move up to the highest break of structure, and not to the actual high, right? Because a lot of the times what's gonna happen, this 618 of the whole move will get broken through and will actually tap this 618. In this case, it front ran, which doesn't happen often, but it sometimes does. So it's like, again, this is just a confluence. It's a way you can pull a fib to get like another number which aligns in the same place. So like in this case, you could have pulled many. You could have taken this order block, right? And you could have taken your fib like this. And you could have taken this one, right? You have in this same area. Then I guess another one you could have taken is maybe this is a 1272. Like, see, this is a range, right? You take deviation, and it's in this same area. So what you end up by pulling multiple different fibs, you end up with an area where you would expect a reversal, right? And there is more fibs. I'm gonna go into more detail, but for now we have 3, right? And you could have used all 3 of them in this same example, right? One from the bottom to the highest break of structure, one from the order block you have here, and you could have used this range deviation, right? Because you've broken this low, and you want to see like where the next possible reversal is, which would be the 1272, right? That's how I apply them. So yeah, you would end up with this area with only these 3 fibs, right? Okay, I'm gonna remove these now for a moment. But yeah, these are 3 ways I apply them. And a lot of the times they're gonna end up in the same area, right? Like, it's gonna be very, should I say, very often you're gonna find areas that have a lot of these aligned in them, and you can expect a reversal there easily. Like, that's the good part about it. And okay, now arguably the ones I use the most are trend-based fib extensions. I know some people use them, but I don't know how they use them. I just know how I use them, because I found ways that work for me pretty much. Okay, so I'm gonna show you how I like applying these. Okay, so like in this BTC range, this is a really useful tool in my example, in my opinion, because essentially what you're looking for is reversal areas in this range. Like you don't, at this very moment, you're in this range, so you don't really expect anything else than just moving in this range. So fibbing the range really is a good way to find good scalp opportunities, or maybe just overall good entries for like a swing from range low to range high, for example, right? And a trend-based fib extension, I take it in a way that gives you very, very precise numbers of where a bounce might happen. I'm just gonna show you. So how this works is you have to select 3 points, right? And then you get a fib out of it. So it's a bit more complicated than a normal fib, but it's essentially the same. It's not any different. And when you have such a big range, for example, right? And like in this case, you move down in the range, you want to look for a potential bounce, right? You want to take a fib from the range high, like the highest point of the range, which in this case will be the all-time high. We go from the high down to the low, take the low, and back up to the current high. So this was here. Okay? And what you're gonna end up is numbers where that will act as support and resistance. And wait, give me a second. There is multiple ways you can take this. You can take it from the range high, or you can take it from previous high, for example. So it's really like fibs are a kind of thing where you can take every move on the chart, and you're gonna get some kind of fib number that aligns in an area, and where there is an area with a lot of fibs aligning, that area will be like the most likely reversal point, really. So that's why you can't just take a fib and do this and expect it to work, right? That's what I'm trying to show you here, that there are multiple ways of how you can apply it, and by experimenting yourself, you're gonna get the best results, in my opinion. So even if you listen to me now and try this yourself, you might not get the same results that I'm getting, right? Because at the end of the day, it depends on how you judge the situation. But still, I'm gonna show you how I use it, right? And yeah, I take it like from the range high to the range low and to the current high. So wait, which one is higher? Has this swept on? No, it hasn't. Okay, so it's this one. Okay, and yeah, these fib numbers are gonna act as support and resistance. You can see here the 146, it clearly acted as support, and it got broken down, retested, and we went lower. So it's pretty simple, right? The 236, it broke down, we retested 146, and we just went lower. Like this one didn't exactly do much, and that probably has to do with this part here, because the 236 was tapped many times here, right? Let's count. 1, 2, 3, 4, 5, 6 times already. So when you came down to it here, there was no reaction, because the liquidity was already like exhausted by tapping it 6 times here, right? So this area in this example really had no effect on price because it was exhausted in this area here. The next area you had was this 382, right? You can clearly see this was trying to support the price, but ultimately we broke down, and we kind of retested, but it's not really a super good retest. So I would say coming back up here, we likely reject. So yeah, you can also use them like for retests. Like they do retest. Like you can see this one here, retested, it closed above, but SFP'd the breakout, right? So this was just a retest in the end. And yeah, next areas you have are this area here again. This is the 0.5 up here. Again, it aligns in this same like $700 area I have, right, on BTC, where there is just so many fibs aligning that I would expect a reaction at least, if you know what I mean. Because as I said, the more fib numbers you have in the same area, the more violent and likely a reaction will be. So yeah, this is one area, and then you have like this 618 area here on these wicks, and a 707 in this kind of order block demand zone on the 4-hour. So yeah, these are just like areas you can again use for confluence with other areas and other confluences to kind of base your area of potential reversal. So yeah, this is another way you can use it. You take a trend-based fib extension from the high to the low to the high, or if you're looking for a short, you want to take it from the low. Wait, no, that's the wrong one. You take it from the low to the high and back down to the low. And I'm gonna remove this one just to show you an example. You see this is a 618, right? I'm gonna mark this, like this is an area, right? You can see we never managed to close above the 618 and we just went down. And you can see how these numbers, look how they get respected. Look at this. So you see it at first it rejected a bit, then it broke out and retested this level, actually retested once and retested the second time here, and we went higher. So it's like you can use these numbers just like support and resistance, and you can see they do react. Like that's why I said you need to find as many fibs in one area as possible. So because there is just so many ways you can pull them that you can't solely rely on one number, right? Because that's not going to work consistently. It might work sometimes, but the other times it just won't, and you're not going to know why. And this is why. It's because fibs tend to cluster in certain areas, right, on the chart. And those areas will be the strongest on the chart. So that's why I like fibs so much, is because you can find so many to try and get like a nice area of a potential reversal, right? It's really useful in my opinion. Okay, so this is another way you can use it. Now, for this example, right, I've shown you this is an order block. We have this 1272. We have this, right, 0.5. Yeah, like this. 0.5 in this area as well. And you remember the one I showed you before, where you take it from the bottom to the highest break of structure, right? And take the 618 of it. Well, in this case, you can take it from this bottom up to this last break of structure, which was this one, right? This is the highest high that was broken in this case. So again, you get this same area, 61.7k. See? So, like what I've drawn this box here, this is, for me, this is the most likely reversal if we go lower. Because now we already have like this area with 1, 2, 3, 4 different fib applications that align in the same area, right? Yeah, this. Oh, now I actually have to think because. Okay. Yeah, he's gone. Let me just read quickly. Yeah, for range trends, yeah, I agree. It's most useful for range trends. Yeah, 786 in the 45k area. Yep. Yep. Yeah, I agree, Lattice. Yeah, it's like just a very powerful confluence in my opinion as well, because it's being clearly respected. Like there is no real like magic to it. It's just about finding areas where most of them align together, right? And really, sure, you can of course you can draw all the fibs you want, and then you can like take, I don't know, some weekly levels or something, and you're gonna, yeah, and just basic support and resistance levels, and you're gonna find that they often align in the very similar places. Like it's it's pretty beautiful, honestly. And once you see it, like once you see an area where really a lot of these things align, you can be pretty confident in taking that setup. Especially if you go into harmonics as well. I'm not gonna go into harmonics right now because this is really not the point right now, and Gracedi has explained a lot about harmonics already, I believe. So I hope everyone's seen that, because combine all the different Fib applications I showed you here and combine them with harmonics, you're gonna get some pretty crazy setups, I can already tell you. Like it's very nice. Especially useful harmonics in Fibs can be for indexes like DXY, USDT dominance, BTC dominance, totals maybe as well. Like especially for USDT and BTCD dominance, I believe like Fibs and harmonics are the best thing you can use there, because yes, support and resistance levels get respected. However, all the wicks you see on the chart usually tap some kind of Fib level, right? So if you have those Fib levels on your chart, you can tell clearly where a possible wick might come in, right? So you can also time your entries, for example, on the crypto market much better. So yeah, this is really the whole point of harmonics and Fibs combined. Because again, essentially harmonics are the same as Fibs, as they just find like areas where a lot of Fib numbers align together. So this is exactly what you're doing here, but they do it more efficiently, and they're just another additional confluence. So for example, if you have like 4 Fib numbers that align in this area, and you have, I don't know, 1 or 2 harmonics that align in this area, you essentially have like what, 15 numbers almost, 14 numbers. You have 14 numbers that would align in this same very space. So like if this doesn't give a bounce, then I don't know what will. Like, you know what I mean? Because I can tell you, like, there is 2 harmonics here. You have this butterfly. C1272 is here. This is another confluence, and you have, I believe it's this deep crab. Yeah, it's this deep crab as well. So yeah, you get my point. Like there is just many levels that align in this very area. Okay, so let me see if I've missed some of the applications, because sometimes I even forget how many I have, because it's like sometimes it's just about seeing it on the chart. It's not like I don't usually like go through a list of all the fib numbers of all the fib applications I use. It's just about the feeling you kind of develop using them a lot, right? Is you kind of start to see them without even pulling them. So when you're searching for areas, you kind of know what the actual area you're going to be interested in is going to be. Like, you know what I mean? Okay. Yeah, okay. I mean, sure, you can also just take a normal fib as well for good measure, and you can see this is a 618 as well in this area. So now you already have like 5 different fibs in this area, but you've gotten these 5 numbers by completely different pulls. Like, you can see, like, most people are just gonna take a normal fib from low to bottom. I mean from low to high, right? What you can do is take multiple different fibs, and you're gonna see where they cluster up, and that is gonna be your reversal area. It's not that hard. Like, one will say, okay, I might wait for the 786, but really, what confluence is there here other than this very 786 itself, right? Okay, you have this order block, yeah, but you don't have five fib numbers like you have it here. So this entry on your 786 here might not even get filled. So knowing where most fibs align together also prevents you from getting potential front runs if you're trying to play the 786, for example. If you see so many numbers aligning in this area, why not try along here already, right? It might bounce because there is a lot of confluence to it, of course. Okay, let me read the charts. What are the different time frames to use for fib levels? Well, you can use it on every time frame, right? Literally. But the higher the time frame, the more reliable a level will be. That's really how it works. Okay. What other confluences? Yeah, it's recorded. What other confluences do you look for if a harmonic pattern is present in the chart? Well, I pull my different fibs, of course, right? That's one thing. Then, I don't know, I look for some potential liquidity pockets or order blocks or something, or potential liquidity rate targets. So in this example on BTC, we have so many untapped wicks, right? Look at this. There is literally 1, 2, 3, 4, 5, 6, 7, 8, 10 wicks with liquidity beneath them that could be tapped, right? So I don't know if you guys saw my BTC setups, but I said that I have 2 setups for a reason, being that these wicks, if we get down here, we're gonna blast through these wicks because we're gonna take all the stop losses below them, right? And in my opinion, if we touch these wicks, we're just gonna blow through and tap the next demand zone, which is this 707 area here in this order block, right? So that's why I have 2 setups. One is up here, which should react, right? and the other one is down here to catch the liquidity grab from these wicks. Then I don't know, you can use daily, monthly, yearly opens, whatever. This is a monthly open here. This is a monthly open, weekly open, and you have your yearly open down here. So that's one thing you can use. You can use VWAP, like sure, why not? Whichever one you want. I use mostly quarterly VWAP. Also, yeah, quarterly VWAP aligns in this same area as well. So if you want more confluence, here you go. And you have monthly VWAP. It's mostly used for scalps, I'd say, like 1 hour time frame, for example. You can see it works really well. VWAP, yeah. EMA, like 200 EMA, that's a good one as well. Then you have volume profile. I use a volume profile a lot. You can take a volume profile of the area you want to see a reversal from, and your point of control should generally be the area which should hold if you go higher. So like in this example, it's in this area as well. Like if you tap through it and just close above and go higher, that's fine. So volume profile. What else? I don't use these indicators generally. They're just here because they can be. RSI, of course. RSI is one of the best things you can use paired with harmonics, because if you see a bullish divergence, for example, forming on a bullish harmonic, that will be a very good indication that the harmonic is working. So yeah, you can use that. Yeah, I mean that would be probably it. I don't really use other indicators than that. You can draw your support and resistance levels, your weekly levels, whatever you want. For example, this level, this is a good level, like 62.5 C. So yeah, it's just about putting together many confluences, and you're gonna end up with good areas of potential reversal. You might want to read Will Sauce's post as well. He does it pretty well, in my opinion. Like he finds areas where he's interested in setups based on many confluences, including Fibs, daily, weekly levels, monthly levels, order blocks, liquidity rates, order blocks, whatever. Like he just finds areas, like I told you here. He finds areas where a reversal is very, very likely. So yeah. That's how it works, really. And okay, one other thing I can show you. Here is a good example. Let's see. So you have this move down, right, on BTC, which broke. This was the last low that was broken, right? What happens if you pull from the high to the low, like the 618? You can see this is exactly the area where we rejected, right? 618 of the breakout structure, right? It's pretty simple, like very, very useful. And if you're gonna were gonna go more into detail how this setup would have worked, I discussed this with Gresady a bit already. But this essentially, this whole range we have here on BTC has been a PvP between Asia and New York and London sessions. And what I'm still looking for, like when taking setups, is pretty much New York and London always. I mean, I'm not gonna say always, just a lot of the times when big moves happen in London or New York sessions, they're gonna be targeting Asia liquidity. So pretty much they're running Asia stop losses, right? You can see Asia dumped the market here, and what happened 2 days later is is just funny. Like, New York and London know that Asia dumped it here, right? So what they do is they sweep the stop losses of this Asia session and they dump it afterwards, right? So this pump was here purely to run Asia stop losses, right? And coincidentally, I mean, not really coincidentally, but it just came to be that this exact sweep ended up tapping this 618 I showed you, right? You can see here. It closed above, made an SFP of this 618, retested it, and just dumped hard, right? So it's just funny, like, how these numbers are so damn useful. And if you want more confluence on this was such an easy setup. Like, it's pretty crazy. You have this bat here as well, 886. So you again had this area. So you had Asia sweep highs, right? You had the 618 and you had the bat. This was just an easy short. This is what I'm trying to show you. You don't need crazy, I don't know what on the chart. You just need very, very precise confluent areas to play off. So that's what Fibs give you, in my opinion, and harmonics as well. And yeah, this thing I showed you now with the Asia, open your chart, take the sessions indicator, and like just look at the range, and you're gonna see how consistently that happens. Yeah, so I believe these were like the most these are pretty much the ways I use my fibs, really. Like, there is not much more to it. In the end, what I showed you now, you have to experiment this yourself. Like, you might find something else, you never know. You just have to try what works for you. I just showed you all the ways I use them. So yeah. And also, for example, when you had this move down here, one other confluence you could have had was if you pulled a 1272 from this move up, this was a 1272 down here as well. Like, this was just another confluence with the bigger 1272 you had here, right? Look at this. Look how they are in the exact same area. Like, this is not a coincidence why we bounced here, right? You know, you had this order block. So if you were surprised that this was a bounce, well, I certainly wasn't. So, you know, there is many ways you can find these kinds of reversals. I don't know if anyone has any questions you can ask, but otherwise I'm kind of done with what I had to say. Yeah, same area, right? Yeah. Nice. Is the same area. Yep, 618, yeah. Yeah, I'm not even sure where you got that 618 from, but yeah, as I said, like, there is so many ways you can pull fibs and get the same areas with different numbers. It's crazy. So yeah, that will be it, guys. Oh, it's that. Yeah, I mean, see. Yeah, you measure reversal candles. Yeah, yeah. Well, see, what Lattice is using is another way you can use it as well. There's just so many different ones. You know, guys, enjoy your weekends. Maybe somebody most correct right now for me. Yeah, yeah. I mean, sure. If it works really well for you, that's good, right? So yeah, enjoy your weekends and, you know, have a good one.